And welcome to my weekly review. This, as a disclaimer, do your own due diligence. This is not financial recommendations to buy, sell, or hold any equity. Anyway, you're looking at a daily chart of the Nasdaq, and this index has been below its 200 simple moving average since January 18th. So it's been a year now. There's only been 3 occasions in the history of the Nasdaq where it's traded below this black line here for more than a year. And that was 1974, 75, 1982, and 2000, 2001. So this bear market's getting a little long in the tooth for the Nasdaq, and this is the lagging index. And you can see the bottom here. It's made a couple of bottoms and retested. This has probably been, a 4-month process. But since 2023 started, you can see the big blue volume bars, and this is what gets me more interested and more aggressive in the stock market. What I am looking for is to have this index take out this 200, trade above it, get above the 12,000, and not start making new highs, because that would be 16,212, but getting above the old prior highs. Okay, of like 11,571 and 12,270. That would be a good start. Anyway, at MC Stock Charts, we went all green last week due to the market internals telling us that the market's turned bullish. Anyway, let's take a look at the S&P 500, because it's lagging like the Nasdaq, but it's doing much better. It closed on Friday above the 200. You can see it's tested it several times and been rejected like Matambo, but maybe this time it'll rip through it. We'll see. I'd like to see some bigger blue volume bars on the S&P. The Dow Jones Industrial Average, this is what we want them all to look like, right? As this one ripped right through the 200, and then came back and retested. It held and now traded right through the 50 once again. And so it needs to take out that 34,712. It already made, a new high above the old 34,281. So the Dow looks good. The mid-cap 400 index is traded above its 250 simple moving averages. It needs to get above the 475.17. And the Russell 2000. Let's see what that one looks like. Let's go to the, you got to type in 0 on Market Smith. And this one is a higher risk index. His perception is higher risk. And you could see the big blue volume bar. So there is strength in the smaller cap, mid cap stocks. The larger cap still a little weak. Larger cap, Nasdaq stocks. So maybe those will play catch up. We'll see. But anyway, that's enough for the index. I don't trade index. I trade stocks. I'm going to go through the biotech stocks first today. These are the ones that I like. You have ones that you like. That's great. But anything with an RX in it is doing well. This is Catalyst CPRX. Made a new high on Friday, then just pulled back a little bit. This one's trending along and finding support at its 10 EMA. It broke out from a base here at about 1660. So it's run up about, more than 30%. So that's for me, it's profit taking time. You leave a little on the table, but for me, that's profit taking time. RXDX is one that I want to look at. Prometheus Biosciences is definitely one to watch for when you see this type of action here. 165% with more than 1,000 of above average daily volume. That's a heck of a move. You got to pay attention to that. Forms a little shelf and then rips higher last week and makes a new high on Thursday at 122.75. So that stock is showing strength. Another RX stock is PLRX, and this one is forming a base. That's why I wanted to show this one. Traded below its 50. Now it's ripped above it. Took time out on Friday. It's still 12.9% above its 10 EMA. So the moving averages need to catch up as it forms this base here. It's definitely one to watch out for. And one of my favorites, they have a new MS drug that was approved. And they're going to launch it And Q1 2023, this is definitely one to watch out for. It broke out of a stage one base here and is moving higher. It advanced, it's 14.6% above its 10 EMA. So that stock is doing well. I want to say it was up, 26% last week. That's a strong move, folks. Let's take a look at the oil stocks. The field services stocks are the ones that are performing well, showing strength. Tidewater is one that's just formed this little base. And if you look at the weekly, you can see how it moves. You know, it made a nice move in COVID, base on base on base pattern, made another strong move, formed a base, kind of a base on base pattern. Now looks like it wants to move higher here. Tidewater is showing a lot of strength. OII, this one continues to make new highs. Last week made a new high at 1956. It's a little extended here, 6.4% above its 10 EMA. But this one, you can see the moving average is trending in the right direction. So that's another field service stock that I like. Nine, pretty much the same thing. It's extended, 14.7% above its 10 EMA, but trending in the right direction. And SLB is reporting on Friday, I believe, of this week. And you can see the base on base pattern, just consolidation. And now it's starting to advance out of this most recent base. But like I say, they report earnings this Friday, the 20th. So that's something to pay attention to. Take a look at some of the drillers. This is Valaris Limited, Val. Once again, you know, looking real strong. You can see the moving averages trending in the right direction. Had this little consolidation period here. You could say the buy point around $70. So that thing looks good, Val. Another driller that I like is CHX. You can see this big move on earnings last time around. You know, it's up to 18% with nearly 300% above average daily volume. You got to pay attention to moves like that. It continued to rip higher up to 33 and now has formed this nice base. As it traded below the 50, now it rips above it. It probably needs some time to allow the moving averages to catch up, as the 10 EMA is it's 5.3% above its 10 EMA. But that one looks good. Champion Corporation. Let's move on from the oil and gas to my favorite group, retail, CROX. This one, you know, we made a low of 46 and had this stage one base here, and we caught it right out of here at about $80. And now it's up like 50%. And it's extended here, 8% above its 10 EMA. That's kind of out of character for this type of stock, but you can see it's trading real calm and gradual, just allowing the moving averages to catch up here. A little timeout would not hurt this thing, and that thing is just doing real well. TJX is another retail stock that I like. You take a look at the weekly chart. It shows this big consolidation. You can see the Dolly Parton patterns here. And then a bigger consolidation with a little, it's not a 3 weeks type, but it's tight trading in here, a little flat base, and that thing pulled back to its 10 EMA on Friday. So that's definitely looking ready to go. And then Deckers, people like buying shoes, huh? They like their Crocs, they like their Nikes, they like their Deckers. And this one is just made a new high on Friday. There's nothing to say here. It's just trending higher. There's no it's a real tough buy, you know, for me to buy this thing here. I'd probably wait for a pullback, but you can do what you want. And the semiconductors, you know, there's a lot of people saying we can't have a bull market without the semiconductors. Well, there's some semiconductors really showing out here. This is ACLS, and you could see that it had the base on base Dolly Parton pattern and then flattened out. We had this on our watch list a few times. It, you know, broke out, then it came back and returned to its pivot. Now it's just ramped higher, and it's really extended here and showing strength, more than 10% above its 10 EMA. Hopefully it'll kind of stall out around that 100 and let the moving averages catch up. Pi 3.14. This is another semiconductor stock. They just reported last week, and there's your weekly chart. I wanted to point out, the reaction to the earnings here, it gapped down. It didn't gap down. It traded down to like its 10 EMA, found support, and then bounced. So this thing looks good. It's just in a consolidation period. You know, it's got that 129 high that it needs to take out. ALGM is another one, pulled back to its 50 recently and just screamed higher. It's got this blue dot here indicating relative strength. And so ALGM looks good to me, and AEHR. This is a flea of a company, as Upticken would tell us. What is it? Market cap of 800 million, with about 60 million in sales. So it's a pretty pricey stock, but you can't ignore this strength here as it bounced after earnings, up 32% with 500% above average daily volume. So to me, the semiconductor stocks, there's been a changing of the guard here from like the Qualcomm, AMD, NVIDIA, and now these newer stocks are doing better and leading. The last group that I want to cover is the contract manufacturing stocks. This is SANM. This has got a 3.5 billion market cap with about 8 billion in annual revenues. They're going to earn $6 next year and it's trading at $60. Ridiculously cheap stock. I know the Solar Brothers are expecting this stock to be going higher, as do I. PLXS, PLXS, yes, thank you. Made a new high on Friday, so it's a little extended. You can see the blue dot showing relative strength, but it's got this little consolidation here, so I'd let this thing breathe a little bit. It's 4% above its 10 EMA, but Plexus is looking strong. JBL, somebody is whining on Twitter that they had insider sales. Yeah, insiders are going to sell, but this thing is making new highs and showing strength. I like that. Flex is another one making new highs. Yeah, I mean, stocks making new highs. Hello. I mean, this is a real strong group. FN is another one, real thinly traded, but making new highs. So that's another group that I like. Anyway, that's it for my weekly review. We never give up.